Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES opened on a large gap lower, primarily driven by the weakness in Europe. And from there, responsive buyers were more dominant and active throughout the entire Globex session so far. Now, short term, the break below the larger time frame balance of 59.5 to 62 has been rejected, and we've seen a pretty decent bounce back up towards the prior range. But at this point on the larger time frames, the market is very mixed and more bearish. So even though we can head higher from here, the idea is given the large overnight gap and given how much weaker the market is overall, we can expect sellers to be active on first test of every resistance zone on the way up. On the downside, the major support is 59.5 to 62. That is a big inflection point, and as long as the market can hold above 59.5 to 62, we could simply balance in a range. Now, overnight we did sell off and then go back up on very heavy volume, and anytime the market is running on high volume, we can get a lot of intraday volatility and a wider overall range on the day time frame as well. So off the open, we'll just have to see whether we're getting any upside momentum. If we are, then a break above 79 to 82 could take us up towards the 87 to 89.5 resistance area, where sellers can still be active on first test, and above that 92 to 94, and then the strong area of resistance at this point is 98 quarter 2175. Now, given the large gap lower, it is unlikely that we're going to go all the way back up to the 95.75 gap fill. The wider the gap, the lower the probability that it will actually fill the same day. So not to say that it can't happen, but it's just less likely. So for that reason, our focus is going to be more on short setups as the market goes higher into the 79.82 and especially the 87 to 89.5. And in the event of a lot of strength and a lot of upside momentum, 92 to 94 could come into play, but again, that is the unlikely situation. Above 79.82, 87, 89.5 is really a major inflection point, and that's an area where the expectation is for responsive sellers to be active and very aggressive. So as we go back into Friday's range, we should start seeing more aggressive selling coming in, and that's even if we go up into Friday's range. We may simply hold below 79 to 82 and then go down to 66.75 to 68.75, which is a short-term support area where buyers may be active. We'll have to kind of gauge the level of momentum as the market goes down there to really figure out whether it's worth trading that zone or not. If we're going down on heavy momentum, then we know that the sell side is more dominant right now on the larger time frames. So we need to be careful at those intermediary support areas like the 66.75 to 68.75. The 59.5 to 62, like I said, is really the major spot where buyers can still be active. And if we fail to hold 59.5 to 62, that would be very bearish on a very large time frame, and from there we could go down and retest the overnight low and most likely the 49 quarter to 51 quarter zone. By that point, if the market is quite exhausted, buyers can still be active. So at that point, you just have to read the intraday time frame and just kind of understand that once the market gets exhausted, even if the larger time frames are bearish, we can still get bounces on the day time frame. So in the event that we go in a straight line into 59.5 to 62, that would actually be a scenario where there would be a higher probability of a bounce. Or if we go straight line down into 49 quarter to 51 quarter, that would actually be a higher probability scenario where buyers can step in. And if we just kind of slowly go down there and the market's quite choppy, then it's better to avoid those areas or just play defense if you are trading those areas. So right now the idea is that on the small time frame in the overnight session, we know that responsive buyers have been more active. There has been a clean rejection of the price below 59.5 to 62, and that means that we could balance above 59.5 to 62. Sellers can still be active at resistance, buyers can still be active at support, and overall we may simply get a day where the market balances below Friday's range, below 87 to 89.5. So there can still be setups on both sides, but if you are trading into resistance or trading near Friday's range, then the focus should be on the short side. And as we go down into the initial support zone and into the overnight low and even lower, at that point the risk reward is not going to be as good on the sell side, so that can attract responsive buyers into this market. So overall it's still a mixed market, but of course, given the large gap, the sellers are sellers do have more edge on the larger time frames, and that's why the safer trades, especially at these upper prices, are going to be on the short side. And our focus is going to be primarily on the short side. And if we're taking any long trades, then we have to be very nimble and play defense with those setups. And unless we're seeing just major upside momentum, and then we'll just have to adjust and kind of go with the flow. But based on the way the picture is setting up right now, the market is more bearish than bullish, of course, given the large gap. It's just that as you go down into some key support areas, then buyers can step in. So, we don't want to be aggressive on the buy side in the upper edge of the overnight range. We definitely want to be more cautious and careful there. So, initial resistance, 79.82 is a possible short setup. 87.89.5 is a potential short setup on first test, especially if the market goes there very rapidly and gets exhausted into the zone. Then that can be a very good zone fade. On the downside, most likely 59.5 to 62 is a area that still has potential to get tested. That's really the bottom of a larger time frame balance area. And if this market is truly bearish now, then that would be the downside objective even on the day time frame. And if we're looking very weak as we get down there, as in there's a lot of downside momentum and everything is really just selling off, then that zone does not have to hold. But that is the main inflection point that we're going to be keeping an eye on the downside. The 66.75, 68.75 is minor support along the way where you may get a rotation, some sort of response, but 59.5, 62 is really the main area that we're going to be looking for on the downside, as long as ES fails at initial resistance, or if it goes up to 87 to 89.5, then we're going to want to see it come back below 79 to 82, of course, in order to get that lower support area into play. And if we continue holding above 79.82, then we're not going to be as bearish on the day anymore. But the overall expectation is really two-sided activity, but primarily focusing on the sell side, on the short side, unless there are just some clear-cut signs that there's just so much buying coming into the market and we're going back up. Then we'll still be a bit cautious. But if you're getting good location on the short side, that's really where the edge is right now. And even on the buys, you're going to want to be conservative and look for a good trade location. Anytime you're running on high volume, again, that can mean higher volatility, higher intraday range, just even bigger intraday swings. So take that into account as you are taking any fade setups or even continuation setups, that there can be more volatility. So that means it's a good idea to even expand your stop size a bit, right? If you typically use a 2-point or 2.5-point stop, you might want to increase that to a 3-point or possibly even a 3.5-point stop. And as long as you're seeing that volatility, you can still get 2 to 3 R out of your trade, even if you're using a 3 or 3.5-point stop loss. But make sure that you are adjusting your stop based on the level of volatility you're seeing, right? So when you're running on massive volume, you don't want to use the same tight stop loss that you would use in a more range-bound and lighter volume market. So take that into account too. So those are really the main thoughts heading into the open. Let's see, if the sell side can maintain control and hold ES below 79 to 82, and more importantly, 87 to 89.5. That'll really help us set the bias on the day, and we'll take it from there.